OpenAI is now the largest private company in the world with a valuation of $500 billion. How did it get here? OpenAI first gained mass notoriety in November 2022 with the launch of ChatGPT. The research tool gaining 1 million users in its first week alone, it ignited the widespread public interest in generative AI that we see today. Since then, OpenAI's growth has ballooned, becoming the go-to search engine for 24% of Americans in just a few short years. That's according to an Adobe survey. Joining me now to discuss the future for OpenAI after hitting this $500 billion milestone is Kyle Stanford, PitchBook Director of Research for U.S. Venture Capital. Kyle, it's good to see you.
Good to see you too.
So it has been an amazing journey that we have seen for OpenAI, and the valuation is obviously eye-popping here. What do you think is sort of the OpenAI special sauce within the fundraising world that has allowed it to just keep, generating this kind of fundraising for itself?
I mean, you kind of look everywhere and it's all really hot, right? Their revenues for the first 6 months of this year were higher than 2024. They've got partnerships with NVIDIA, AMD, Oracle, Microsoft, Apple. They've got, they were kind of first to market. So kind of everywhere you look, there's a high reason for these investors to, want to put money into here. So like, I don't know if there's a singular secret sauce that OpenAI has, but all of those together just really make it an interesting company.
Yeah, I mean, I guess the secret sauce isn't so secret, right? Because we all see it in terms of the adoption of ChatGPT. What I find interesting, Kyle, is that, certainly when we talk to people, even people who are AI bulls who invest in it, they do share some of these concerns about the so-called circular economy, right? And the NVIDIA investing in OpenAI, which is using some of that money to buy NVIDIA chips, et cetera. Has that had any kind of effect on its fundraising ability?
You wouldn't be able to tell it if it has, right? If it's jumping from 100 to 300 to 500 in consecutive years and raising $40 billion from investors and secondaries going up at, $6.5 billion, every 6 months or so, like if there is any hesitation because of the circular economy, you're not seeing it in the fundraising.
The other issue that has been sort of dogging OpenAI for a while now is this separation that it has been attempting to do or is going to attempt to do between its nonprofit and for-profit arms. That has faced some legal challenges. Is there any chatter on that in the fundraising world and what that's going to mean for the company going forward?
I mean, I think it's really tough to have too much chatter on that until you kind of, get the full run out of what's going to happen, right? Obviously, if it has to stay a nonprofit, that's going to be very difficult. But the way it's moving and the way it's partnering with all these big tech companies, it's tough to think that there's any more hesitation because of that either, right? Obviously, that got a lot of talk when Elon Musk was diving into and setting up challenges for Sam Altman and OpenAI. But there hasn't been too much talk about that specifically over the past few months.
Kyle, you've been covering this world for a while. How anxious do investors get to exit, right? And what would an exit look like for OpenAI? And at some point, what does that cycle tend to look like?
I think OpenAI is going to be very different than every other company we've seen go through the kind of venture life cycle, right? You're at $500 billion. You have ample amount of private capital waiting to take secondary shares, so you can get employees, early investors, the liquidity they're looking for. You have no real reason to go public now with the growth that they're seeing in the private markets. Like going public is going to add a little more cost and a little more hurdles to get through when they're just trying to operate and kind of really charge forward with their revenue growth. So I don't see an exit necessarily, like a traditional exit from an IPO, or obviously not an M&A is going to happen. But an IPO is not going to happen in the next year or two for OpenAI, right? Until you start to see that private market capital dry up for this company specifically, there's no reason for them to go into the public markets.
Are they going to be under any pressure to go profitable anytime soon, Kyle?
I don't actually know that they would be able to go profitable in the near term, right? When you look at the cost and the way that that's grown too, they blew their cash burn rate was about $2 billion through the first 6 months of the year. They're looking for $6 billion in total burn in 2025. that's not something that they would be looking to just cut and completely change their business model, right? They need that money to be put to work. They need it to continue growing, to be bringing out new models, to reaching new customers, to creating new inroads for enterprises into their business. So they're not going to be cutting that burn anytime soon. So I don't see this becoming a profitable company.
Go ahead,
Oh,
Kyle.
you
What
go
were you
for
going
it.
to say?
Oh, I was just gonna say, obviously the energy costs are another thing, right? If you're
Right.
spending a lot of money to run all of these chips and all the energy that's taking, without energy prices coming down, they're gonna have a huge cost in that category too.
And the final thing I wanted to ask you, Kyle, is with so much capital going to OpenAI, are we seeing other companies kind of be starved of capital and having trouble fundraising because so much is going in this one direction?
I don't think it's because of OpenAI, right? And when we look at the startup market, it's really kind of two different markets: all of AI and the rest, right? When you look at who's investing in OpenAI, it's Dragoneer, it's Thrive, it's SoftBank. Like those are firms that are not short on capital and are able to get capital in different areas than just the dry powder in their VC funds, right? So I think when you look at the rest of the market, though, if you are not an AI native company or haven't integrated AI into your business model, it's a really challenging environment to raise. So it's not going to be one single company that is taking a lot of the money from startups right now, but AI in general is having kind of like a 2021 looking chart up into the right every year, new deal count or new record deal count, new record deal value. That is taking money away from the non-AI companies who are unable to kind of create that revenue growth that they might have seen up through 2021.
Thanks, Kyle. Appreciate it.
Of course, thank you.